Bitcoin is going through one of its most emotional moments in years, and the market is reacting exactly the way it always does. People buy when everything looks perfect and panic when prices fall. For the first time in a long while, Bitcoin briefly entered the cheap zone on the long-term buying chart, even though everyone spent a year mocking the idea that anything under 200K could still be considered expensive. Now that Bitcoin is in the low 80s, the same people who were desperate to buy at 110K have disappeared, which is the classic behavior during moments of extreme fear. Short-term holders are realizing the biggest losses since the FTX collapse in 2022, and many of them are capitulating because their average cost basis is near 110K. The market is currently 2 full standard deviations below their average price, which causes fear, panic, and forced selling. Several digital asset treasury companies are also struggling, many of them trading below their managed NAV and unable to issue more debt to buy additional Bitcoin. Even MicroStrategy is showing signs of capitulation as its stock approaches a key support level that acted as a bounce zone in the previous cycle. Bitcoin ETFs have also seen massive outflows this month, adding short-term downward pressure on price. But the creator of the video emphasizes that different trends matter depending on your time horizon. If Bitcoin holds the short-term trend, rallies can continue. If it maintains the medium-term trend, bearish narratives can be ignored. But breaking that medium-term trend means investors must face reality and reconsider their bias, even if they want to stay optimistic. Technical analysis becomes especially important when rumors and speculation begin to flood the community. People blame wounded market makers, index adjustments, or OG whales supposedly abandoning Bitcoin for privacy coins. But none of these narratives can be confirmed, and most simply serve to comfort investors who want to justify their bias. Technical analysis forces traders to accept objective facts instead of emotional stories. For long-term investors, the 50-week moving average has historically been a key line for invalidating or confirming the macro trend. In past cycles, reclaiming that level marked the beginning of huge bullish runs. But breaking below it means accepting that the trend is weakening and that something fundamental may have shifted. Despite this break, Bitcoin is getting close to the 100 and 200-week moving averages, zones that historically produce powerful bounces. The market is experiencing its second worst November ever, rivaling the capitulation of 2018. Even so, Bitcoin still has a high probability of bouncing from these major levels. Macro conditions complicate the situation, interest rate expectations have shifted drastically, global liquidity is uncertain, the dollar is strengthening, and nobody knows exactly when QE will restart. Gold remains strong, the S&P 500 is still holding its trend, and Nvidia's earnings eased some fears, but Bitcoin appears to be leading risk markets with its weakness. Economic data shows that GDP remains positive and unemployment, although rising, has not yet triggered recession-level alarms. Inflation data is still pending, and the Fed's decisions remain the biggest macro catalyst. Ethereum has also sold off aggressively, but it's sitting on major support and remains stronger relative to Bitcoin than many expected. Even treasury firms holding huge losses on Ethereum continue to suffer, but long-term fundamentals such as BlackRock launching a staking ETF provide optimism. Altcoins overall show surprising resilience. Despite Bitcoin's capitulation, many altcoins have held key levels, and the altcoin season index is far from extreme lows. Solana, too, is approaching strong support levels and continues to attract ETF inflows. Over the past year, Bitcoin, Ethereum, and Solana have all been in what could be considered a quiet bear market despite being in a post-halving year. Looking ahead, the U.S. government's massive deficits and exponential debt growth will eventually force more money printing, creating a long-term bullish environment for Bitcoin and other fixed-supply assets. Still, corrections in bear markets are inevitable and must always be risk-managed. The video ends by reminding viewers to prepare for multiple outcomes, stay objective, and recognize that fear-driven moments often present the best long-term opportunities.